Trading psychology can play a really big role in the success or failure of all the decisions you make whilst you're trading. And in this video today, we're going to talk about what you need to do as a trader to overcome it. How's it going, guys? Ryan here today with another stock market basics video, and today we're talking about quite an interesting topic, and that is trading psychology and how you can overcome it. But before we get started, as always guys, if you enjoy my video, please give me a thumbs up, it helps me out so much. Subscribe for more content, and remember to leave any comments, questions or queries down in the comments section below. So let's get straight into it. What is trading psychology? Well, trading psychology is effectively the way a trader thinks, acts, determines how he's going to make those decisions whilst he's trading, and the factors that come into play to influence his emotions while he's doing so. It is extremely important to keep your emotions under control so you don't make rash decisions whilst you're trading. Otherwise, it can end in disaster and can mean that you actually lose money that you normally wouldn't. Furthermore, it's not just understanding your own psychology, it's understanding the market psychology, because every buy and every sell that occurs on the market is by another individual. So you need to understand how the market reacts to certain situations, certain indicators and certain announcements to really be able to take advantage or preempt certain situations that may be going to occur. There are two main areas that trading psychology can really come into play, and that's what we're going to discuss today. So the first one is greed and the second one is fear. So touching on greed first of all, greed is effectively the amount of money you're trying to make and your ability to know when to take a profit or get rid of a stock at the appropriate time. You don't want to be greedy, because as a result of greed, you can actually turn a large profit into a smaller profit, or even potentially into a loss, because you keep hanging onto a share for a greater profit. This is an extremely bad way to act as a trader, as it results in you not having a real clear strategy and you're trading with your emotions, greed in particular, as opposed to with a plan or with a set of rules in place. What you've got to remember is you're not going to get rich overnight. You're not going to make that big hit all of a sudden. What you want to be looking for is those small and consistent profits, whilst also cutting those losses very, very quickly. And the small and consistent profits will build up over time. And when you put that into perspective, that enables you to be a bit less greedy, because as a result, you can clearly see over the course of 20, 30 trades, for instance, you've made incremental increases each time, maybe a few losses here and there. But over time, the money actually does add up and builds up your portfolio. You don't need to be looking for those one-off massive trades, because there is often a lot of risk due to the amount of stocks you probably hold if you're taking one of those trades. Furthermore, you don't want to be dwelling on missed opportunities, and greed comes into play here, because you might be in a stock, you're making a good profit, you decide to jump out, but then you see the stock keeps running. You should really not dwell on this too much, because you can result in a situation where effectively you end up buying back into the share at the top end of it and it absolutely plummets. And that's due to your own greed. You're not happy with the trade that you've already made, and your emotions are coming into a play and taking over the actions of your trades instead of your trading strategy itself. So please try to avoid these sort of situations and put in place a rigorous strategy in order to make sure you're taking those small and consistent profits, and then when you have taken the profit, not jumping back in or making rash decisions that result in you losing money accidentally. This moves me on to the second area we're going to be looking at, and that is fear. Don't be scared. You don't want to be dwelling on trades once again, for instance, and being scared, oh, maybe if the stock drops a bit more, it's going to actually bounce up, but instead it actually keeps dropping in value. Don't be scared of cutting your losses now to mitigate potential further losses in the future. Don't be scared of that bounce potentially occurring, it's better to just cut your losses there and have a set limit in place to know when you're going to sell stocks. Another key area that fear affects is your ability to make rash decisions. If something unexpected occurs, make sure you're prepared for what is going to happen. Even though it's unexpected, you can still have those basic rules and a strategy in place in order to make a calculated decision. As a result, you won't be allowing your emotions to come into play and dictating what you decide to do on that trade itself. There is absolutely a time and place where quick decisions are absolutely required. But in saying that, you want to have these, as I said previously, being dictated by a strategy or a set of rules or your entry and exit plan, as opposed to your emotions coming into play and your fear making you sell immediately. Because let's say, for instance, that a stock's going up and then it drops all of a sudden for no reason. Let's say you've got a point of 5% negative where you're going to sell out and it hits 4%. It still hasn't hit your exit point. So don't panic and sell immediately. Wait for it to hit your exit point, because for all you know, it could actually bounce. But having that strict strategy and strict rule in place of having that 5% exit point means that you're not going to lose more than that amount of money. So just stick to the strategy overall and see what happens. Now, coming to my third point, and I've touched on it a bit this video and I touch on it in a lot of my other videos, and it comes down to having your strategy in place, having rules set in place so that you know exactly what you're going to do when the price fluctuates on a trade, whether it be up, whether it be down, whether the indicators change. Whatever happens, you've still got that strategy in place. And effectively, what the trading strategy you put in place or the rules you set for yourself are going to do for you is mean that you're not going to be taking rash decisions. You're not going to be making decisions dictated by greed or dictated by fear if you stick to your strategy and know exactly what you're doing no matter what situation occurs. And once again, incorporate trading psychology into your strategy itself, so you can really use this to your advantage when predicting what the market is going to do if a certain situation were to occur. And if you have that first mover advantage, you're going to be able to be in the best position to make a move if the stock drops in price or if the stock increases in price. Trading psychology is something that's extremely hard to get your head around in the sense of implementing it into your day-to-day trading, because your emotions are often a lot stronger than the rules you put in place, in the sense of your emotions are going to dictate where you want to go, and you really need to force yourself to follow that strategy, to follow those rules, so that you don't end up losing more money than you potentially have to, or making the most amount of money that you can by following your strategy rather than following your emotions. And unfortunately, this is something that you're going to learn over time as a trader. And if you don't follow that strategy, you're going to see the impact firsthand of what's going to happen. And this is going to help you to understand the importance of having this strategy or those rules in place at a time. And with that, guys, that is the video for today. Really hope you enjoyed it. If you did, leave a like down below, subscribe for more content, and leave any comments, questions, queries, or thoughts down in the comments section below. With that, guys, I hope you have an awesome day. See you next time.